This is Bob Anderson, and I wanted to do a video that discusses some of the major causes of failures of mine in the past and things that I currently, even to this day, struggle with. And also some of the things that people make comments on my videos about that, oh, if I just did this that you talk about, it would stop me from doing X or Y. And this topic, this video is really related to more newbie traders than longtime traders. But you never know. Anyways, and what it is it's just the things that the top, in this case, 4 things that have caused me to either blow up accounts in the past or make mistakes in the past. And even to this day, one of them in particular, I still struggle with. So anyways, I want to just discuss those so that you may identify them in yourself as you're failing evaluations, if you're failing evaluations, or if you're getting ready to do an evaluation. For example, at Apex or Lilu or wherever. But anyways, these are them in no particular order except the first one. The first one, which is averaging in on losing trades. I even had a subscriber to these videos mention to me that he had actually even taken courses on it with a trader that actually did this, averaging in on losing trades. I'm going to tell you something. It's an issue. It's that I struggled with significantly. And it's the number one reason that I ever blew up accounts in the past. And where it comes from with me is, again, I'm very math oriented, very science oriented throughout my whole life. And I gravitate towards math and science because they're supposed to be exacts. 1 + 1 is 2. In the grand scheme of things. So no teacher could sit there and give me an interpretation of my grammatical sentence that they didn't like to tell me that they didn't like my essay. You know what I mean? Or somebody didn't like my philosophy of what happened in history versus their philosophy. So, but math is math. It's an exact. And science is supposed to be an exact, but not when there's politicians involved. But anyways, let's not talk about that. So I gravitate towards that stuff. Well, knowing that that's what I gravitate towards, and then putting a plan together that says, if the candles do this and then they do this, then they're going to do this, means that I would take trades. And if the trade didn't go my way, I would not accept it as being a bad trade. So I would average in to try to keep the trade from being a losing trade to turn it into a winning trade. I don't know if I'm making sense to everybody about that, but that is a huge thing that I struggle with. Huge. Number one reason I blew up evaluations at Apex. Number one reasons I blew up my own personal accounts in the past, before I got back into trading last spring, is just not willing to accept that the trade didn't work. And how do I deal with that? By accepting the fact that this is a statistical probability more than a factual exact. And what I mean by that is, if the trade does all the things that I expect before I enter it, to then go for, say, 5 points on a long, it broke through the pivot, pulled back to my gold line, set up nice consolidation and power, and then I took a long, for example, off the break of the candle, a continuation trade, for example, and it didn't work. What I had to do was keep telling myself mentally, I'm not wrong. The trade was not wrong. This was just the statistical probability that this trade was not going to work. None of these actual setups that I use are 100%. You get what I'm saying? And I have to keep reminding myself that. So that I don't take that trade that I'm so sold on, so convinced is going to work, and it starts going against me, and I start buying into it as I'm losing. By the way, when a trade like that fails, here's another thing. When a trade like that fails and it starts going against you, the price action against you actually accelerates, because other people that took the same trade as you start reversing themselves out. And as they're reversing themselves out, it just speeds up the price action against you. So if you're buying into that failed trade, you are just putting bad money on top of more bad money. So I had to mentally teach myself that just because I took a trade and it didn't work, it doesn't mean I was wrong. It just means it was one of the statistical probabilities that the trade was not going to work. Because no trade, I don't care what it is. I don't care if it's an overnight open trade. I don't care what trade it is. No trade works 100% of the time, period. So, you gotta recognize. So what I work on and what I struggle with on number one is to not consider myself being wrong, but considering myself to have tried a good setup that it was the statistical probability it wasn't going to work that time, and I have to take myself out of that trade with as small loss as possible when I see the signs that it's reversed against me and it's not going to work. And any loss, $200, $300, whatever it is that I had to take is going to be better than me trying to averaging my way out of it. Especially when you're taking evaluations and all of a sudden, let's say you're doing the $25,000 one and it's $1,500 drawdown. I mean, bam, 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 bam. I mean, when you're averaging in against a losing trade and all of a sudden you went from having one contract to having 3 contracts to having 4 contracts, it does not take long against you for 4 contracts or anything like that to add up to $1,500. And like I said, the loss starts accelerating itself because the people that took the same trade as you, they're now backing out. So, number one is the biggest cause, in my opinion, of my account failures in the past. May not be for you, may not be for everybody else that watch these videos, but that by far is my number one. That is definitely it. And that's the one to this day I still struggle with. Okay. And it's the one that why I started this YouTube channel. I wanted to hold myself accountable for my trades. That's the whole reason I started this YouTube channel. Because when it was just me holding myself accountable to myself, I did that and made those mistakes. That's how I blew up all 3 of my funded accounts prior to my 4th funded account that I'm now using now. That's exactly how I blew up all 4 of them. Or all 3 of them, sorry. I'm not going to blow up the 4th one, please. Anyways, so that's my number one. That it's that fight to always think that I'm going to be right. Number 2 is one that'll be the slow death. The slow death in an evaluation or in your account or whatnot. And that is trading with stop losses bigger than or equal to your targets. I mean, if you're entering a trade and your gain for being right is not greater than your gain for being wrong, you're probably taking the wrong trades. It's my opinion. It's just saying it. It is a pet peeve of mine. I I think you should never roll the dice unless the odds are in your favor. And so, you know, if your anticipated win is not 2 times your anticipated loss, why are you rolling the dice? So anyways, that's my opinion. Again, if you go back and watch through my videos, when I started on August 15th with my funded account, I would come on. I used to come do a video like every day, and I would do my actual results for the week, like one win. I had one week where I had only 3 wins, like 4 or 5 ties, and like 3 losses, and I still made $1,200. Why is that? It's because my targets are greater than my stop losses. It's not about being right, it's about being in the right trade. This one does kind of coincide with this one, by the way. The larger the stop loss traders use, the greater they're trying to be right in the trade. So anyways, number 3 is trading too big for your account size. You know, I sit here with a 10 contract account through Apex, and I only trade 2 contracts at most on average, 3 contracts. I mean, because the reality of it is I'm trading off of, you know, a balance really, you know, forget the $50,000. I'm trading off a balance of say $4,000. You know, when I first start trading, when I first get the funded account, I've got a $2,500 potential drawdown. If I was trading, say, the 10 contracts and it goes back 1 point on me, that's $500. Goes back 2 points on me, that's $1,000. So just a 2-point pullback on me, I've lost half my draw. Doesn't make any sense. So you've got to manage the size of your contracts and your trades that you're taking to based on what your account size is. That's the sign of somebody just trying to do a Hail Mary if they're trading too many contracts for their account size. That's a Hail Mary thing. And again, this is not a sprint. This is a marathon. I've had my funded account since August 15th, not to depress anybody, but since August 15th. Today is October 10th. I've earned $2,000, which they paid me last month, and I've already earned my $2,000 to get paid at the end of this month. I just got to keep my account from blowing up. So, but I still have 21 days before I'm going to get that. I mean, this is a marathon. This is not a sprint. So why do ridiculous stuff that's going to blow up your account? You know, again, I've talked about it. I've got a plan on how to turn this into something bigger than just this $2,000 stuff and $2,000 stuff and whatnot. But I got to get there. You know, Rome wasn't built in a day, nor did it collapse in a day. Anyways, and the 4th one is over trading. If you get a high on trades, you know, you get stimulated by trades and stuff like that, that's great. Do what I do. Do exactly what I do. And that is trade my hours. I trade my hours. I can pass 10:30 a little bit, depending on price action of the day, but I really try to stay within 8:30 in the Eastern Standard Time to 10:30 Eastern Standard Time, and predominantly 9:45 to 10:30. I really try to stay in my hours. Again, unless price action's really moving, I'll carry it out to maybe 11. But the reality of it is, once you get past a certain time frame, 10:30 in most cases, it's time to put sim mode in and screw around. It's not time to be using your account. Let's talk about evaluations, for example. If you're sitting there with Apex, for example, I say Apex because I just know their evaluation stuff off the top of my head. They're all relatively similar. But the bottom line is, if you're trying to do the $50,000 account, or all the evaluation accounts I'm trying to tie to my funded account right now, in either case, you have to have either a $1,500 profit after 10 days or more, or a $3,000 profit after 10 days or more. You certainly don't need to be trading after 11 o'clock to be hitting your targets of $200 a day off of, say, 2 contracts. You really don't have to be doing that. And that's when the market starts becoming less consistent. That's when the follow through is not there. That's when you're trying to make money the hard way, honestly. And that's where the slippage gets greater because the liquidity is not the same. I mean, so is this going to kill your account necessarily overnight? No, but this again could be a lot like number 2, the slow death. Number 1 and number 3 are the fast death. Number 2 and number 4, those are the slow deaths. Again, don't let this slow death be your death. Just sim trade. If it's a high that you want, practice, do something, sim trade. Maybe you'll even find something that happens, I don't know, at 2 o'clock in the afternoon consistently that you can count on and turn it into your trading. But don't make it a norm until you sim trade and whatever it is you're practicing becomes more consistent than to be using your evaluation and or your funded account. That's my opinion. Again, these are all my opinions, but these are all things that I made mistakes on myself personally. And so that's what I wanted to do this video, was to, if I can shed light on something you either may be making mistakes on yourself now or that you foresee yourself making, just learn from somebody else and try not to make those mistakes yourself. My current trading strategy, if you really pay attention to the 3 trades I've talked about in detail in my videos, avoid all 4 of these, because that's exactly what they're set up to do, is to avoid any of these 4 things. Predominantly number 1, because number 1 is brutal. And I will bet you number 1 is the reason that 90% of people blow up their evaluation accounts. That would be a pretty good bet. Anyways, everybody have a good day. This is Columbus Day, so I did a dick and dunk for $75 on all my accounts because I wanted to keep my evaluation accounts moving forward. So I'm over halfway there. I'm only 4 days into it. Like I said, I think I have until like the 18th or something that I have to go to minimum just before I can even apply to get them live, if I can get to the $1,500. So anyways, everybody have a good day. Talk to you later, and keep your stops tight and trade on the right side of the market. Bye.